one of the biggest advantages any startup has is a blank sheet of paper. What people tend to mistake is like the incumbents in the market are not stupid. They're really smart. They have a ton of money. They got a bunch of really smart people working at these companies, but they have constraints that startups don't have. One of them is rationality. These very big businesses oftentimes make very rational decisions about how to operate, what they can and can't do, that end up being a constraint that stop them from doing things that startups can. It's not, these companies aren't stupid, and that's not why they get disrupted. Sometimes they get disrupted because they're like operationally, logistically, or organizationally precluded from taking the kind of risks from writing on that blank sheet of paper the way a startup can. That blank sheet of paper, this tabula rasa view of like everything can happen is very unique to a startup, and we count that as an advantage too. I'm Kyle Nakatsuji from Clearcover. This is the future of insurance.
This episode is brought to you by Medallia, the market leader in customer and employee experience. Their award-winning SaaS platform, Medallia Experience Cloud, makes all your other applications customer and employee aware. Medallia uses proprietary AI and machine learning to reveal predictive insights that drive powerful business actions and outcomes. Leading insurers like Prudential and Zurich use Medallia to reduce churn, turn detractors into promoters, create in-the-moment cross-sell and upsell opportunities, and drive revenue-impacting business decisions. Learn more at medallia.com. And the Future of Insurance book series, available exclusively from Amazon or at future-of-insurance.com. Kyle, thank you for joining me, sharing
Thanks for having me.
More of the story.
Of course. Thanks, Bryan.
So this is kind of an add-on to the book, to the case that you guys are in, which I'm super appreciative, not just to tell your story, but honestly, like, I don't think I've laughed that much or been as amused just hearing about the creation of an insurance company. So
I don't know how to take that, Bryan. I'm not sure where to go with that.
You and Derek have a really good just kind of charisma together. Like it worked well. But it's cool to hear the story and from the early days, like from the earliest thoughts of the idea before we always say before insurtech was a word, but like everyone's talking about embedded. And you guys were talking about it before that had a name as well. Was it incidental distribution? Was that the term that was kicking around?
Yes. Incidental distribution is what we called it. Although we didn't invent that either, right? Like, bank assurance was around in Europe for many years, and then affiliate was a thing here. We just like amalgamated a lot of other people's smart ideas into our own idea with a different name, which was probably my favorite way of being inventive, but whatever.
To give us a little bit of the flavor of like, where did all this happen? How did Clearcover come to be, and what are you guys building?
Yeah, so I was fortunate to help start the venture team at American Family back in 2012, end of 2012, and as you said, at the time, insurtech was not a thing. There was insurance and there was technology companies, but this word insurtech was not around, and the venture ecosystem had not pointed its attention towards insurance as like the next bit of fintech where everyone was going to spend their time. So it was early, and Peter Gunder was the gentleman who ended up hiring me into American Family, and he was their chief investment officer at the time. And Peter is incredibly smart, thoughtful, ton of foresight, and he had the prescience to say, "Look, I think this, insurance and technology are on a crash course, and we want to figure that out. And we also have this big pile of money sitting here. So why don't we spin up a team to invest money in technology companies and figure out what that future is going to be?" So we did that for a couple of years, and
that was still early in insurance. Like CVC hadn't really come online yet. AmFam was definitely kind of the cutting edge of that.
Yeah, we were. I mean, if I recall correctly, I might have my facts wrong, so just apologies if I do. But the Hartford actually had been around and then folded. Mm-hmm. And then when we started American Family Ventures, it was just us and USA.
Yeah.
So there were really, 2.5 that existed that were like true dedicated corporate insurance CVCs. And it was new. It was early days, certainly.
Yeah.
And so that's why we're doing such crazy stuff. There wasn't insurtech to invest in. So we were investing in software to sell to insurance companies and like calling our folks over in like vendor management to be like, "Hey, do you have the list of people that American Family works with? Like, I'm wondering if any of them are a startup." So we were doing all sorts of crazy stuff. And then insurtech really started to spread its wings in like 2014 and 2015.
Yeah, there was no ITC yet still.
No ITC.
2016.
No, it was right 2014, 2015 is like when the term first emerged.
Yeah.
And it was right around that time that like the earliest next gen carriers were getting started. So that was like Lemonade was just coming out of stealth,
Yeah.
and Root was just getting started, and it was right in that like early 2015 range where you started to see that, and then from there it just picked up
Boom.
a ton of speed.
Yeah.
um, and we were out there looking at the market, trying to figure out what we wanted to invest in, and spending a lot of time. I was spending a lot of time thinking about this next gen carrier space and how people would win there. And ultimately, we just landed on a bit of a contrarian thesis with respect to what we were seeing in the market. And what it boiled down to is, I mean, we'll get into it in more detail, I'm sure, but maybe the highest level version of this is there was a bit of a hedgehog and a fox situation in the market. You know the story of the hedgehog and the
No idea
fox?
what that means, but it sounds prickly.
So well done. So the essentially the hedgehog knows one big thing,
Mm-hmm.
and the fox knows many small things, right? And what we found is that there were a lot of hedgehog ideas out there. People who like thought they knew one big thing that was going to change how the insurance game worked, whether
Yeah.
that was how the product was priced or a user experience that was new and unique. And what we believed is it's more of a fox problem. You really have to do 100 things uniquely, differently,
Mm.
and in ways that create customer value. And so, how do you build a company that has the fundamental underpinnings to do that? And the fundamental underpinnings of doing it, building that Fox InsurTech company, were in our mind brand new technology, new technology infrastructure, and an advantage cost structure.
Mm-hmm.
Because at the end of the day, those two things would power all of the 100 things that you needed to do in order to build something really transformative in the space.
Yeah.
And we looked around and we didn't see it. And so at the end of 2016, Derek and I jumped to join Clearcover and start building, these little bits of things on top of that foundational idea of cost structure and technology would be the fundamental underpinning of a next generation insurance company.
Yeah. And you guys did that still with AmFam support. So you left the company to start Clearcover, but AmFam was your first investor and was supportive. I mean, that's to me like that was such an interesting piece of the story was like, not only were they supportive of what's going on in SureTech and being willing to invest, even to the investing their own people, like losing, two people on the team to go do this and stand behind the business. That's it's just a really nice reminder for me that insurance is not old and difficult, and like there are many ways that the industry can be flexible, and that seemed to be a pretty extreme example of like, yeah, go and do this, we're going to stand by you, but you need to be free to make this happen.
Yeah, AmFam has always, in my opinion, been a bit ahead of the curve. They're really a pioneer in a lot of what's happened in insurtech, and this was no exception. I think it took a lot of organizational energy to say, you know what we'll do? We'll allow these two crazy guys to leave and start a company that's competitive with ours
Yeah.
theoretically, and we'll give them money to do it. And like I think hopefully they don't regret that choice, but like it certainly took a lot of courage at the highest levels of the company to say like, look, we believe in the transformation of this industry and we're willing to explore different ways to enable that. And so let's give this thing a try.
Yeah. So all right, so different platform, the technology, the cost advantage, but what is it that's so different about the concept of Clearcover? Because you guys are right now, we're saying this before recording, like you're doing auto insurance today.
Yeah.
So it's easy to say, okay, well, there's just another startup personal auto insurer, and what's different about that? But that's not really what the idea is.
Yeah. So we sort of use this technology and our there's a bunch of different things we do on the distribution front as well, but we built this fundamentally advantaged cost structure, and then on top of this fundamentally advantaged cost structure you can do all sorts of very interesting things. But I would say, look, like we have some differentiation in terms of the APIs we built to integrate the product in places where people are already shopping for insurance. We have some differentiation in you know how we manage claims. I can talk about our AI based claims product. We have some differentiation in you know the number of users who use the digital products that we build. Like there's all these things I can get to, but maybe to take a step back, the more simple way to think about what we do differently is we built, and this is not supposed to be a shot across the bow to anyone else in the industry. We built what we believe is a truly customer centric insurance organization.
Yeah, what
and
does that mean?
and so what that means is if you think about what customers want from from their insurance experience, it really boils down. There's one output. They want to feel confident in the choices that they've made, right? You want peace of mind. You want to feel confident in the choice you made. And in my opinion, there are four inputs to that customer confidence. The inputs are transparency, convenience, low prices, and superior value. If you can do those things right, you're going to win a lot of customers. Are going to stick around with you for quite a while. And now what we've done is, those are pretty simple concepts, right?
Yeah.
But what we've done is said, look, let's take this fundamental underpinning of technology and cost structure and use it to create something really unique and differentiated in each of those four inputs, right? How do we think about creating something that customers are going to love and they're going to say, wow, looking at in each of those four? And so we can go through them, but like, that's really the different, that goes back to this idea of the fox versus the hedgehog.
Yeah.
We have these four inputs to the one output we're seeking, and we're constantly trying to innovate and differentiate the ways we deliver those inputs to our customers.
So how does that actually play out in practice? So like your first product getting delivered, what are some of the ways that, like you mentioned price, but then you also mentioned value. It's like, what's the difference
Yeah.
there, and what does that mean in actuality?
So I'll walk you through some examples of stuff we do that fits into our input framework here.
Yeah.
So we are a decidedly multi-channel company, right? We don't believe it's very convenient for the customer if they can only find you in some channels and not others. So
Yeah.
we, unlike some of our peers, we decided to work across multiple channels. One of those channels is this concept everybody loves now called embedded insurance, which is we built a bunch of APIs to integrate the product very seamlessly into places where the consumer is already thinking about insurance or likely to think about
Yeah.
insurance. And so for us, that ticks the box on convenience, right? If we can do that better than anyone else, that's a unique bit of convenience. It also allows us to minimize our spend on other things, which flows into lower prices. And those lower prices allow us then to provide people with more coverage at a lower rate, which goes into superior value, right? So like you sort of pick a thing, you let that thing flow through your four inputs, which allows us to create these confident customers. I'll give you another example. We built a product called Clear Claims. And Clear Claims essentially allows you to submit a claim through the app, and then our AI can decide if you can get paid out immediately. We can pay some claims in under 30 minutes. We've paid claims in as little as 13 minutes through our Clear Claims product since it launched. And again, pretty convenient to be able to submit your claim and get paid in 13 minutes. It also tends to lower our costs,
Yep.
which again, we can pour into lower prices, or we can use that money to offer you something else. What if we can give you more than just insurance because we've saved money on the claims process? So there's a bunch of things that are in the works now that I can't talk about in this particular podcast
Yeah.
that we're thinking about, that either key to transparency or superior value, or thinking about ways that we can continue to add products or be more for the customer. But again, always keying back to, these are the four things that matter to our customers. How do we deliver something that is fundamentally unique, differentiated in each of them?
It sounds like they're like the four legs of a stool, to use the overused analogy, but if you can't lose one of them. Like they're all completely intertwined. Is that like is that how it
Yeah.
plays out?
So yes, they're connected, as I've been discussing, but you also have to keep them in balance. And this is where again, like, it becomes a bit tricky, because certainly you could over index towards convenience if you had, 24 hours per day white glove service,
Yeah.
right? Like, you call, I have an individual dedicated to you, they know your name, they're your best buddy at our company, and like when you call, that person picks up. Like, that would be pretty convenient, but that's not in balance with low prices,
Right.
right?
Right.
And so the key is to make sure that you understand the input elements of this wheel, and that you can sort of use the foundational advantages you have, technology and cost structure, to do things that are really unique, but also keep them in balance. And like that, I think being able to do that is at the heart of what our company does, that I believe will ultimately make us successful.
Yeah. Well, I have to say, I thought this was really like an embedded play. That was the key thing about it. But it sounds like you're saying actually it's bigger than that. So it's not just auto. It could be other lines, other products, but it's also not just embedded. Once you have that multi-pronged advantage focused on those four things that ultimately customers care about, you're looking at different ways to deliver that too, not just through like embedding it into an existing process. Is that right? Or is it really focused on being in the flow of some other purchase?
embedded is just one tool among many that feed those inputs.
Okay.
So we think it's interesting and we think it's helpful, but I mean, to be very candid, we just wanted to build like an embedded insurance provider. We'd probably be done by now. That would have been a lot more straightforward.
Yeah.
What we wanted to do is build something um, that's really transformative, that leaves a mark, that's going to be around for a while. And that goes back to this idea of the hedgehog and the fox, right?
Yeah.
It's not just one big thing that ends up building, a company with a legacy.
Yeah.
It's doing many of the right things over a long period of time with the right foundation beneath it. And that's where we're aiming, at least.
Yeah. I guess it would be ultimately hard to exist as just, and I hate the word just, but just an embedded solution. Because then, like, why is that its own company? Why isn't that just either something everyone can do or something that's a part of someone else versus creating something that's bigger than that? And it's just one of the many tools. I get the point there. I had a hedgehog growing up briefly as a pet. It's not a great pet, so I just keep going back to that. Like, they're nocturnal, they smell, and yeah, they're prickly, but they're fun and weird at the same time. Anyway, so what do things? And I know there's stuff you can't talk about, but what are some of the ways that you then transform the spaces that you're in going forward? Like, what are are you trying to move the market, or are you just focused on, we're just going to be the best solution we can be in where we're playing, and then that's our right to exist and to thrive, versus like we're trying to change the kind of the paradigm in each of the spaces we're in?
I mean, our ambitions are not small. Let me start there.
Yeah.
And they also tie back to this idea of, the insurance customer is at the center of this like confidence loop that I've been describing.
Yeah.
And they need more than just car insurance, right? It's not a very convenient experience if you need more than just car insurance and that's all that I can give you. Now, that doesn't mean necessarily I have to own all of the products that I sell you, but it does mean that I haven't delivered on my convenience input if I haven't found some way to help you take care of all of the risks that you'd like to
Yeah. Fair
mitigate,
point.
right? There's another side of it where, this is like a very considered purchase. You spend a lot of money and you put a lot of faith in your insurer. And for the most part, what you get is a piece of paper and a promise that you walk away from and hopefully never have to cash in. And like, I feel like we could do so much more, right? You've earned the trust of your customer. Like, what else can we provide you when you join our company, when you subscribe to our service? Like, what else can I give you that's more than just a piece of paper? And so
Yeah.
again, I won't get too deeply into it, but there's a lot of things that are on our roadmap where we feel like we can deliver against these four inputs in really unique ways. Again, though, going back to, because we have this reinvented technology stack, which
Yeah.
allows us to do creative things, and we have a cost structure which allows us to do things for the customer without messing with the prices.
Yeah. No, it's a huge enablement of a lot of possibilities that would just be off the table otherwise. Or we get back to,
Right.
well, it's insurance, so if you do any of these things that you're talking about, then it's rebating, so we can't. Whether it actually is or isn't, or whether you've actually sat down with the regulators and talked through it, or looked at, well, what can you do that isn't rebating that may still
Mm-hmm.
create value for the insured? I do feel like often we talk ourselves out of things without at least exploring it, or maybe because some of those enablers are not in place, or that to have them in place for a lot of companies would just be too cumbersome. So, kind of building that in from the start gives you more opportunity to see those possibilities, maybe.
I think we talked about this in the piece you wrote, but one of the biggest advantages any startup has is a blank sheet of paper.
Yeah.
You don't have the, like, I think what people tend to mistake is like the bigger folks in the market, the incumbents in the market are not stupid. They're really smart. They have a ton of money. They got a bunch of really smart people working at these companies, but they have constraints that startups don't have. One of them is rationality, right? Like, these very big businesses oftentimes make very rational decisions about how to operate, what they can and can't do, that end up being a constraint that stop them from doing things that startups can. And so it's not these companies aren't stupid, and that's not why they get disrupted. And oftentimes they get disrupted because they're like, operationally, logistically, or organizationally precluded from taking the kind of risks from writing on that blank sheet of paper the way a startup can. So
Yeah.
so that's like, we talk about it in your piece, but that blank sheet of paper, this tabula rasa view of like everything can happen
Yeah.
is very unique to a startup, and we count that as an advantage too.
Yeah. So, Dan Reed from AmFam Ventures wrote the forward for the book, and he called that out explicitly, and that can't always be that can't be your single advantage over
Mm-hmm.
over an incumbent. It can help when you're starting up. You can do things faster, you can do things more creatively, whatever. But what happens when they catch up and they have their scale? So, back to your point about those enabling advantages that you have that allow you to, it's not just because you were new that might have helped you set them up in the first place, but that once that ball's rolling, you need something to keep it going, or eventually it'll come to a rest.
Yeah, I agree. And that's where I think it comes to, you have to think hard, not just our business, any business. You have to think about what are like your sustaining competitive advantages. What are these fundamental underpinnings of what you can do well? And for us, that ends up being the technology platform and our cost structure.
Yeah. I want to talk about the team a little bit because you have some insurance depth. Derek's nickname is was the insurance Sherpa, so how he was known back in the day.
Yeah,
So
he was.
the presumption being like, well, it's got to be all outsiders, or you like, there's presumptions about what a startup needs to have or not have, and you guys had this mix, but you weren't a technical guy, you weren't an insurance guy, you'd been around those things, but you weren't in depth there. Derek's this hardcore insurance wizard. Um, and just kind of wondering, like, so what do you need to build out around that to get to the place that you've been in, and maybe some places where you saw some gaps after the fact, or like once you were so far in it, you're like, you know what, like on the system build, like we need a different kind of person to look at this and help us through it than what we have in front of us.
It's a good question. We've always been believers in um, in balance in terms of technology and insurance talent. Like I think there's this like rhetorical red herring question around, are you a technology company or an insurance company? And that there's the answer is yes.
Yeah. What
You
does it
you can't
matter?
you don't get to choose, right? If we're in order for us to win, we have to do both really well, which implies that you have to think carefully about what it means to run both of those companies under one roof, and
Yeah.
how those people work together, and what people you bring in to lead those areas, and like how your org is structured in order to make sure that you're thinking about both things at the same time. So there's a lot of blocking and tackling that has gone into figuring out how to try at least to run both of those companies effectively under
Yeah.
one roof. And like from a talent perspective, it's you have a double challenge because we have to try and hire people who are kind of world class technology product company builders, and
Yeah.
we have to try and hire world class insurance talent, and it's hard. So
Yeah.
it's that is a non-trivial part of the challenge, is trying to figure out how to get that balance correct, and then how to get the right people on the bus once you have it.
Yeah. And you did a lot of that hiring through the pandemic, so not having met a lot of the people in person, at least, that's which is just another complication.
Yeah, it's we hired, I think the stat was like 135 people
Yeah.
between April 1st and the end of the year,
which is
fully
which
remote.
is like that's crazy in and of itself. And as a percentage growth of employees, like even more so.
It was about
But to do that,
100% year over year. Yeah.
yeah, I mean that's wild. And then to do that fully remotely, and you hired some pretty pivotal people in that mix as well. Like your CFO or something like that. Like you had some senior folks come in.
Yeah, we hired our CFO, we hired our chief insurance officer. I mean, everybody's critical, pivotal.
Yeah,
So, but yeah, I mean, look, the hat tip to our people team, who really, we were about 30% remote headed into the pandemic, so
yeah,
we had a little bit of experience, but like people team, IT team saw the writing on the wall and said, "We're fine, we'll figure this out." And like they did an incredible job making sure that we found great people and they got onboarded, and like they got what they needed from a technology perspective. That was not a small hill to climb either. So I was very proud of what they were able to deliver on that front.
yeah. No, it's great. I mean, it's interesting. a lot of startups are set up to be ready to go remote because that's the tools that everybody uses and everything's cloud based, and people tend to be more tech savvy in the company. So in some respects, you're ready to go to do that. Yet at the same time, startups are much more collaborative and open floor plan and people huddling together. Like that's all more common. So it's like kind of these opposing forces at work where yeah they're used to a lot of remote work or have the enablement for it, yet also really thrive on that in-person, like in the moment collaboration, which you can do remotely, but it's a little bit different, or you lose some of that kind of ad hoc, like bumping into people and just talking about something and discovering something in the process. Have you seen that happen, that
Yeah, it's hard.
there was a slowdown? Or
It is hard to replicate that environment remotely, certainly. Because even, it's not like everybody just went remote. Everybody went remote during a pandemic.
right.
So even fully remote companies were still like getting their people together at regular intervals to try and create these moments of serendipity and put a
Right.
name to a face and do all that. And like you couldn't do any of that either. So culture building, excuse me, is always hard. Um, it was particularly hard during the pandemic. And we intentionally we're not an easy place to work. We don't aim to be an easy place to work. There are plenty of easy places to work.
Yeah.
That's not the goal. I think, I think we talked about it in your book. The essence of startups is risk.
Yeah. Yeah,
You're
you said that
supposed to be
exactly.
able to fall off the high wire and die. That's the whole point. If that weren't the case, then everybody would do these things, and then startups wouldn't exist. So like, it, um, it's a really hard thing that we're trying to do, and so it's sort of incongruent to say we're trying to do this really difficult, nearly impossible thing, but don't worry, it'll be really easy to work here.
Yeah.
And so like it's a hard place to work. There's high stress, there's a lot of pressure, and like and I think we also though care very deeply about what we're trying to achieve and what sort of our employees are able to achieve and their goals and like their ability to grow and learn and be pushed and like accomplish these things that seemed wild to them only a few months prior.
Yeah.
And it's harder to, candidly, it's harder to like really um push people in a remote environment than it is in an in-person environment, because it's the way you push people is by also showing them you care deeply about
Yeah.
them personally, and that's just a little harder to do on a Zoom than it is when you're together all of the time. So
Yeah.
we've worked hard at it, and I think we've done fine. But it's certainly not an easy challenge.
Yeah. Yeah. No, I can imagine. I mean, because the like just walking up next to someone and talking about something versus like we have to schedule that. It goes in feeling different. You can still
Yeah,
do it, but it's different.
yeah, I agree.
Intentionally so. Like you have to work at it. Um, so we're getting close on time, and I'm just curious, like just kind of looking forward. Lots of things you can't talk about, but maybe broadening out from Clearcover specifically. What are some of the things you think are on the horizon for the industry, or the dynamics that are going on right now? Because there is so much activity at the moment. Like I was saying before recording, like writing the book has been really hard because every time I think I've finished the case, there's another press release or like some other news bit goes out that another round of funding or another announcement. So the cases keep changing like in real time. At some point, I got to say like, no, it's time to stop. But
Yeah,
there's a ton of activity in our industry right now. Like, what's your take on that? Where do you see things heading?
there's a lot of work left to do. I mean, the way that and to be honest, I used to spend all my time thinking about this. Now I can spend very little of my time thinking about this. But the really the insurtech market in my mind is happening, or has happened in three waves. So what we're going to see here is this first wave um, grow up, and like we'll see how this next phase works for them. So the companies like Root and Metromile and Lemonade and Hippo, and hopefully people like us and Next, and like we'll see this first wave of like next gen insure tech companies have to deal with the next set of challenges of like
Mm,
being big, being public companies, like all of that.
yeah.
The second wave, the wave behind it, is more a wave of it's sort of split. It's enablers, folks who are like selling software and other different bits of technology to carriers or these next gen insurtechs themselves. and it's like pivots from those models. So like, a different version of the thing that was started a couple years ago, and we're going to start to see those now grow and like hit that phase that the next gen insurtech carriers were just at, and
Yeah.
we'll see what happens there. And then there's the one that I'm excited about but know the least about is the wave behind that, which are like these brand new off the wall ideas that are just now starting to get thrown out into the market, and like people who have seen what's happened over the past 5, 6, 7 years and said like, here's like a completely different white space that
Yeah.
no one else is actually thinking about, and like I'm gonna go and do. And there's a couple of those out there that I think are quite interesting, but certainly there's a lot of that book left to be written too.
Yeah. Looking around at some of the developing markets, I see things that I'm just like, I can't imagine that being in the US at any time, or like Western Europe or other more mature insurance markets, but maybe. They seem kind of off the wall, but yeah, there's stuff brewing here as well. That's just kind of like, I never even thought of that. I was
Yeah.
just talking to Caribou Honig the other day, and he mentioned something I was like, that would never have occurred to me. And watch, like 5 years from now, it'll be a thing, or however long.
The market is so big that even the edges of the fractal stain are really big market opportunities.
Yeah.
So it's exciting to see like this sort of more esoteric, crazy stuff, because again, the edges of what's possible are still multi-billion-dollar market opportunities, and
Yeah.
there's really big companies to be built there. So I'm excited. I think we're still in the early innings of insurtech generally across all of these waves. So
Yeah. That's
we'll
really
see.
cool. I can't thank you enough for, not just for this conversation, but for the hours that you and Derek spent with me, both in the interviews and then reviewing the case and everything. I really appreciate it. It was great to get the Clearcover story in the book. So thank you for all that, and for joining me again today.
Hey, look, per usual, Derek did all the work. I just take all the credit here. So no problem on this end.
We can, that's good. Then if people don't like it, they can blame him. But otherwise,
That's
yeah,
that's
it's
how this
intentional,
works.
maybe. Yeah, that's great. Kyle, thank you so much for joining me.
Thanks, Bryan. Appreciate it.
Huge thank you to Kyle for joining me for an episode of the show. It was great because it was really a very different conversation from the one that went into forming the book, the case in the book, which is exciting for me because it's just a new perspective on a number of things. Some time has passed, but we talked about different things, different thoughts in Kyle's mind about the formation of Clearcover and some of the reasons and the things that we're building to, but then also looking forward and kind of where the industry's going, what's bubbling right now, that third wave. Really interesting. We gotta see what crazy stuff emerges, and just where it's going to take the industry. So interesting times for insurance, insurtech, the industry as a whole. So I think you should be taking that in, think about what could change, what possibilities there are, and remember those 4 values that matter to the customer to build their confidence. Is so central as an insurance company. So take that in as well. Marry that with the ideas that are bubbling in your head about what we could do in this industry. And I think you will have a recipe for creating something really valuable. Thank you again to Kyle and to the team at Clearcover for this interview and for all that they gave in the journey in Feeding into the Future of Insurance, Volume 2, the case study there with Clearcover. And also thank you to Medallia for sponsoring this episode and making this all possible. A reminder, if you haven't subscribed, you should. You can subscribe in your favorite podcast solution, whether that's Apple or Spotify or Google or whatever. Wherever you listen to podcasts, you can subscribe. And of course, if you're watching this on YouTube, hit the subscribe button, hit the notification bell after you subscribe, and never miss another conversation. All right, I will leave it there. Thank you to Upbeat Music for supplying the music for the show. And as ever, you can always get more from Upbeat Music on Spotify, Apple Music, Amazon Music, Google Play, Pandora, wherever you like to listen to stuff. Just search for Upbeat Music. I'll see you guys next time. Thank you.